Welcome to the week ahead with me, Angela Barnes. You're watching IGTV. So let's look ahead then and start in China on Monday, the 21st of August, because we're going to get the loan prime rate setting from the People's Bank of China. Well, China is expected to cut lending benchmarks, with many analysts predicting a big reduction to the mortgage reference rate to revive credit demand and shore up the country's ailing property sector. Well, that's in response to a deepening property market crisis. The central bank has pledged it would adjust and optimize property policies according to its second quarter monetary policy implementation report that was published this week. Well, then moving on to Germany, we will have the latest producer price index data measuring the average change in the price of goods sold by manufacturers. Prices fell in June from the previous month. And then on Tuesday, the 22nd of August, let's go to the UK, where we will see the latest figures on public sector net borrowing. Well, in May, the government's total debt pile reached more than 100% of annual national income for the first time since 1961. Let's move on then as well to the US, and we're going to have existing home sales as well as API crude oil inventories. In the US, we'll have existing home sales and the latest API crude oil inventories data that day. Then Wednesday, we'll have Eurozone UK, US manufacturing and services PMI flash data as well. And then we will also have EIA crude oil inventories on Wednesday. Oil prices have been interesting recently. Oil prices gained this morning, but that's after falling for 3 straight sessions, with both Brent and WTI up this morning. There's those demand concerns in China weighing against supply concerns with Saudi Arabia and other OPEC members potentially extending those cuts beyond September, as has been suggested. So that will be something to look out for oil prices as well. But Thursday, the 24th of August, a busy day in the US with durable goods orders, initial jobless claims. So we'll get a good gauge of how the US jobs market is doing. And also the Jackson Hole Symposium starts too, a key event in the diary, with the Federal Reserve's chair, Jerome Powell, giving a speech centerpiece that week that investors will, of course, be paying close attention to, critical for the broader market sentiment. And then on Friday, we get an insight on consumer confidence in the UK. And also Germany will share its final second quarter GDP growth rate. Well, the first advanced estimate was released at the end of July in Germany, and they showed that real GDP grew at an annual rate of 2.4% in the second quarter of this year. But that missed forecasts for modest growth as weak purchasing power, higher interest rates and low factory orders weighed on the Eurozone's largest economy. And then on Friday, we will also get the latest Baker Hughes oil rig count in the US. Well, let's go now to Tasty's Tom Sosnoff, who's in Chicago in the US for us. Because Tom, I'm good to see you there. I'm very interested. There's a lot to digest there, but I'm very interested to hear how you think investors should be positioning themselves ahead of all of that economic data that's due out next week.
Sure. Well, first of all, we have a big day today because in the U.S., this is option expiration for August. So there's usually a ton of activity on today, and we're opening, pretty significantly lower, at least a 0.5% down, this morning pre-market, and the Nasdaq's down, almost a full percent. So it's going to be kind of an ugly opening here. So I think that the economic data is going to have a little less to do with things when you compare it to market momentum right now, which has clearly turned south. This week has been very bearish across the board. And so the question becomes, when the markets turn south like this, the question really becomes, is good news bad news, and is bad news bad news? And I think that's the biggest, that's the market has to watch out for. And that's also the biggest risk. Because, when markets kind of sell off, it doesn't really matter so much what the news is, because they turn good news into bad news, and bad news obviously, makes things worse. So I think it's really a question of, when we get down to that kind of that 5% correction area, is that enough? And how will the market hold up through all the news next week?
Including as well, Tom, of course, that speech from Jerome Powell next week as well. Is there anything that the markets are anticipating him to say that may sort of, there be any suggestions on the Federal Reserve's that may impact the monetary policy path?
Well, for us, it's all about what is actionable from it. Nobody really cares what he has to say, in the sense that, if it's not actionable, it doesn't matter to us. So from an actionable side, the bonds have been incredibly weak in over the last, let's say, 2 weeks. The bonds have been essentially in free fall. And in the US, the 30-year bond has traded down yesterday to about 118.5, which is the lowest it's been to, in multiple years, essentially, except for a touch a couple of years ago. So we're at a point right now where, long-term rates and short-term rates are at multi-year highs. And I think that, whatever Powell says at this point, it's really just a question: does it stabilize the bond market here? And is there an opportunity to the upside? Because I think bonds are, at this point, they feel like they're pretty grossly oversold. So the question is, can Powell stabilize long-term and short-term rates here? And will we get a bounce in the bond market? I don't think it matters necessarily what he says. I think it matters how the market, just how the market perceives his comments as a stabilizing, more of a stabilizing emotion, and to see if we can get some kind of a flattening right here of, basically a bottom in rates. And we'd also like to see, many of us would like to see the yield curve start to widen a little bit, because we'd like to see long-term rates go up and short-term rates come down. So I think that we're looking for a little bit of a yield curve move here, and we'd like to see it widen a little bit. And it's been flattening all year, so we'd like to see it kind of go the other way. And I think that's going to be the real takeaway from Powell's talk. Can he push short-term rates a little bit lower? Can he push long-term rates a little bit higher? Can he get the yield curve back to where it steepens a little bit? And can bonds stabilize over whatever's said next week? And I think that's what we're all looking for.
That's great, Tom. Thank you very much. And do stay with us. I'd like to come back to you in a moment with another question when we go through corporate highlights now. And that's what we're going to go to next. Thank you very much, Tom. So the week ahead, let's have a look. Well, we've got Zoom reporting its second quarter earnings on Monday. On Tuesday, John Wood Group is another one to look out for, releasing its first half earnings. We will also have figures from Toll Brothers next week too. Then a big one to watch on Wednesday, with tech giant Nvidia reporting its second quarter results. While the US software company had its stock boosted again this week after Morgan Stanley analyst said that its stock is the firm's top pick following its most recent earnings report. Nvidia, which makes graphics processing units, is now valued at over $1 trillion. Its shares are up nearly 200% so far this year. And of course, it's a key player in the artificial intelligence AI market, which has certainly helped boost its stock. However, strategists at Morgan Stanley have also recently highlighted how the AI bubble could be nearing a peak. So on 23rd of August, the company will offer investors more insight into its financial health with its second quarter results. That's certainly one we'll be watching. Elsewhere, so next week on the corporate calendar, we'll also have second quarter earnings from Snowflake on Wednesday. And then on Thursday, we'll be turning to Hays with its full year results. And then as well, Dollar Tree on Thursday. We'll also have results from Gap, the retail giant as well. They'll be releasing their second quarter earnings. And then no updates on Friday. So quite a few things to look out for on the corporate front next week as well. So I'd like to go back to Tom at Tasty for his thoughts on this and which ones you're going to be watching, Tom. Of course, Nvidia, a big one.
Yeah, well, you start off the week with Zoom, and Zoom's interesting because Zoom is tradable, but it's kind of on its butt, as we would say, because Zoom's kind of near the low end of its range. So it's an interesting play for people that like to trade earnings, because it's, a $65 stock or wherever it is right now, close to $65. And it's also a stock that has high implied volatility. So it's a very attractive stock to trade. It's just not as liquid as we would like it to be. But as far as the big players next week, it's really all about Nvidia. Last earnings cycle, Nvidia blew the doors off to the upside. Nvidia was the expected move was about $30, and it moved almost 90. So it moved 3 times the expected move last time, and it caught everybody on earnings. If I remember correctly, it was trading just around 300 or something, maybe a little bit under, and it traded all the way up to almost 400. So it was a crazy move last time. And I don't think you're going to see that kind of earnings insanity this time around. And I think Nvidia, which is now trading, let's call it, 430, and it has been strong all week. There's a lot of longs in Nvidia right now. The whole street. I mean, nobody has a portfolio that's not long Nvidia here. So I kind of feel like that Morgan Stanley comment is maybe the upside capitulation, but we'll see. But there's no question that Nvidia will set the tone for the market this week. I don't think you're going to see the kind of earnings results you saw last time when it just blew the doors off. But I do think that most of the week, the volatility and the market will take its cue from Nvidia. We are going to be playing it to stay inside the range this time. But again, it's just a crapshoot. Who knows?
Well, Tom, I'm looking forward to seeing those results as well. And thank you ever so much, as always, for your insight. It was great to speak to you.
Thanks so much.
Well, thank you, Tom. Well, that's it from us at IGTV with your look ahead to next week. So thank you for watching, and do tune in for more charting and trading the trend shows. I'm Angela Barnes, and this is IGTV. Thank you.